Excellent. Well, that's a hard act to follow. So thank you very much to Nicole for setting the scene on some of the big questions, particularly in public procurement. So I'm Jan Bebbington. I run the Pentland Centre for Sustainability in Business, and I'm a close colleague of John Ferguson's in the Centre for Social Environmental Accounting Research. And I'm going to give a slightly a contrasting perspective, which will help draw out our conversation more widely, I hope. So the links that I've got to the seminar themes, and particularly those word clouds and the answers to the questionnaire, is that I'm going to look at accountability. And as a topic-based example for doing that, I'm going to use what I would call the next frontier in corporate accountability, which is looking at nature impacts and biodiversity impacts as well. I'm going to quickly pass over reporting as governance, which is exactly something that Nicole talked about when she had those two curves, and talk about why we end up falling back on reporting. I'm going to introduce the reporting landscape, or the governing landscape for reporting, of which some of it's the governing nature landscape, of which some of it's about providing reports. And then I'm going to talk about some actions using three examples of corporations who are trying to figure out how to do some of these things. As I get into those examples, I hope you see that the whole public-private distinction starts to break down, because it's more of a collaborative approach between private and NGO entities. I'm also going to claim that reporting might need some preconditions for it to be effective, and so I'll run through some of them. So that's where I'm hoping to go. I think of these points, the one I'd really like to come back and say again, and hopefully will stick in your minds when you come to the questions, is that need for collaboration between public, private and NGO actors in order to deal with, in our case, biodiversity issues. So the first thing I'll say is that, and this is very much in line with what Nicole was looking at, but it's maybe taking a slightly more generic level approach to understanding why do we end up with reporting as governance. And I know that many of people on the call and many of my colleagues feel quite frustrated that we end up having to use particularly some voluntary standards in order to get companies to report, and somehow that's going to give us governance and governance strength. So I would split my views about reporting as governance between two things. Firstly, in the nature area, a lot of companies are already being governed quite tightly in around what resources they can draw down, what kind of remediation activities they need to undertake, how much pollution they can produce, etc., etc. Of course, that reporting on the ground across the globe is variable. And so if you want to figure out how you're going to govern in this space, you'll end up with laws of that sort, which are the command and control laws. So they can govern, a country can govern its own physical space about what organisations do in that physical location. Likewise, you could work on market mechanisms, and this is perhaps more obvious in the area of climate change. You could put climate taxes in a whole variety of ways, and you'd use the market to internalise externalities in some way and therefore drive behaviour. The final approach then that you get to, which is the one that we see so much when we're looking at accounting and reporting systems, is the reflexive law, the information governance approach. So instead of saying that you must or must not do something, we require that organisations tell us what they did. And then people lean on the power of markets, the power of shame, the power of NGOs, the power of laws like greenwashing in order to create a certain set of behaviours. Now, that's not the strongest of the three. But the reason why we end up there is that if you've got transnational corporations who have activities all over the globe, if you pass disclosure regulations where they're headquartered, then you can get a glimpse of what they're doing all over the globe, even though they're regulated in different ways in different places. So this whole globalization sort of feature of organizational life means that we find it harder to do market mechanisms and command and control. It's not impossible, but they're harder. And so we fall back on information governance. So that's why it's there. And so even if you might dislike it or think it's quite weak, which I think it is quite weak, it is practical in the circumstances that we're dealing with transnational corporations. If the kind of organisations you're researching are wholly within one country, you don't have this problem. It's only a problem that arises when you get transnational global organisations. And yeah, a bit of shameless plug for a paper that we tried to lay all of this out and why it works the way it works. So if I move to say what's happening in corporate biodiversity reporting landscape, well, it's kind of lively at the moment. And each one of these boxes, if you like, are in a state of flux as well. So what you're getting is that at an international level and an intergovernmental level, you have a convention on biological diversity. And at the end of last year, there was a new framework agreement, which included an instruction to countries to regulate for corporate disclosures and around biodiversity and nature impacts. And I'll show you that disclosure, that article in the next slide. But things like the convention are for nation states, and then things sort of cascade down and through the system. And so you end up with, some international tasks like the Task Force on Nature-Related Financial Disclosures that's trying to think about how do you take the principles of the convention and make them applicable to organizations. Then you get down to more local level reporting requirements as well, whether it be in the EU for EFRAG on the far side or more internationally with IFRS and ISSB. And I suppose the aspirations of those bodies is to make a global reporting standard. In the meantime, you've got the Global Reporting Initiative for impact reporting. When it comes to biodiversity, they've recently updated their previous standard, which was 304, and there's a brand new standard that came out in January. Companies that report against the GRI will need to use the new standard within 2 years. And then you get a whole bunch of information intermediation. So this is where, if you like, our knowledge of capital markets and how they operate become quite important, because you've got bodies taking data about companies, ranking, profiling, making sense of best to worst lists, etc., which create, if you like, some information incentives in the field as well. So it's not just a company deciding if they fancy doing something. In various forms, people will also benchmark and rank them. So if we start with the Convention for Biological Diversity, what you would have heard of is maybe Target 15. So this requires countries to enact policy measures and legislation ultimately to ensure large and transnational companies and financial institutions provide biodiversity data. The kind of data they're requiring and will require about the company's own actions, but also the impacts along the supply and value chains. For investors, they want to know what are the biodiversity impacts implied within a portfolio that's being held. Now, that's quite an extensive sort of reach, if you like, to be able to provide data of that sort. But I'm going to show you some examples where people are already doing that. But it will be a new step up in terms of reporting, and it will also be a step up in terms of management and management accounting activities. And it's mainly focused on markets. But these requirements will also be equally relevant for public sector organisations as well. Given that by and large they might be operating in one country, executing these arrangements will be much easier, but it will still be challenging, but easier because it's just in one country, and therefore not necessarily, but possibly in one biome, one sort of biological measurement unit. The main thing, however, that the convention requires is that for each country to produce the national action plan. And what we've been watching for, but which we've yet to see, is corporate reporting that says the extent to which the organisation and the place they are help support the national action plans. So that would be for me a bit of a dream to see reporting of that sort, because it's both public and private sector linked together into the same place. So if you have your government has a plan for A, B, and C, then how is you as an organisation going to achieve A, B, C? So maybe it's something to look out to. The reason why I say that with confidence is that we've been looking for it. Each year we do a summer survey of some of the best reporting around on biodiversity and provide a bit of a summary note on the Pentland website. So if we're going to have this magic outcome that we think we want, which is to be able to get corporate level data about biodiversity within the context of global ecosystems, then there's a series of steps that are needed. The first one is that those preparing the accounts have to be ecologically literate. So there needs to be an increase in literacy. So you know what you're trying to do, but also you know how to report. So you need to know, well, what ecosystem am I in? What kind of drivers do I have of global, nature change? What's the carrying capacity? And then links, particularly between nature and climate change, which will be a big topic going forward. The second thing is, as an organisation, you need to know what you're doing everywhere, both in terms of your own direct activities, but also the activities of your whole supply chain as well. And these need to be fixed in a place on the globe, because once you know that, you can then have a look at the state of biodiversity in that place, and therefore to what extent your direct activities or those of your suppliers are affecting biodiversity outcomes. And then you've got the translation device is the one I'm going to really focus on today, is how do you translate activities to ecological impacts in a place with corporate level data. And I'm going to tell you that there are people that help you do that. So we're going to look at some information intermediaries that help that happen. And my three examples are from the private sector, but they could equally be from the public sector. It's just that my research focuses on the private sector, so I see these things more clearly. So example number one then is coming from Japan and coming from a company called Maruha. And what they have been doing is that they have a series of commitments to be ecologically sound, to be stewards of the ocean, which includes them knowing all of the things that they're drawing from the ocean. And so it took them about 2 years to do this. What they did is that they did a survey of their raw materials, either raw materials that they caught on their own vessels on the ocean, or raw materials that they purchased through somebody else who caught them somewhere on the ocean. So what you get then is something that looks like this, and I realise that if your screen is small, it might feel quite small, so hopefully you've got a nice big screen in front of you. So they're looking at domestic and international groups, surveying all of their raw materials, procured or produced, and down at the picture in the bottom, they managed to identify that they've captured 1.41 million tonnes of seafood. And then the colours tell you the extent to which they have managed to work out if they are in an ecologically sustainable zone. So the blue ones are healthy, and I'll tell you how they did that in some of the following slides. The light blue one are those products which are certified through the Marine Stewardship Council or something of that type. So here you've got certification as a proxy for how environmentally sound your fish catch in this case is. If those certification standards are poor, this data will be poor. So it's a proxy used through a third-party certification process. Then they've got the orange, which is the not healthy things, and then they've got a bunch of stuff that they don't know anything about. I always really like data when they say, and here is what I don't know anything about. It kind of gives you a sense that there is some probity in their data gathering, because if they only tell you, oh yeah, I know about them all, then I find that quite difficult to believe, because it's a hard thing to know about them all. So what they then disclose in their reporting is what is the not healthy bits. So what are they capturing that is not healthy? And here you can see the extent to which it's quite concentrated on Pacific mackerel and then a few other species as well. So what's